Good evening, members. Good evening, good afternoon, and good morning from wherever you are, from wherever you're watching from. So this is basically a breakdown of how I was able to get these Euro USD sales that I posted earlier in our Telegram community. So I'm going to be breaking them down, and you also can be able to know why I was able to take these sales without using any indicator, without using any trend lines and all that stuff. So let me start off with a breakdown. But before starting off, let me try to explain something similar in pullbacks. So someone was asking me how I go up with pullbacks. So it's basically like this. When the market is in an up again and pulls back, shoots up again. So basically, a pullback is a price point. Let me say this move from here up to here, pulling back towards the equilibrium or past the equilibrium and shooting back up. For example, go below the equilibrium, and same applies from here up to here. The pullback had to go up to past the equilibrium, but not past this previous swing low. It should not go past this previous swing low. The same applies to here. It should not go past the previous swing low. And if it goes past the previous swing low, that is not a pullback. That qualifies to be a change. Of goes past the equilibrium and shoots back up, that's a pullback. But if it doesn't, if it goes after, that shall be no longer a pullback. That shall back lower. So that is it for pullbacks. I hope I've tried to explain well. So Euro USD on the weekly time frame had been bullish for some very good time, and most of you were so trapped thinking that it was going to be bullish for a long time, and most of you were actually holding buys. Yeah, but eventually some of you got stopped out. Yeah, quickly it was showing that it was a bit bullish, but before I continue any further, we have a running program of our 200 serious individuals who would like to make trading full time. You can enroll in case you're interested, and even mentorship is ongoing. In case you're interested, you can enroll. Whichever you feel like comfortable to, you can enroll. So mentorship is currently running at 50 USD. That is the end of year offer that we are having. But once we leave this year, the prices shall stabilize to their normal prices. So you can take this chance as it's still in existence and be part of our learning community. So with those few regards, we can continue with our breakdown. So when you take a close look, we said in our strategy, we are most interested in the most recent breaks of structure. So when you take a look at this weekly pulling back, going up, pulling back, past this low. So I'm interested in, so I mark up this most recent break of structure, and it's a bearish one. So this confirms to us that the weekly time frame is in a bearish phase. And here we had the liquidity grab. So I also mark it out that we had a bearish QM already. A bearish QM is here. You get that is a bearish QM. So after getting a bearish QM, what else are we interested in from our trading range? I'm seeing all of these three candle formations got broken from here. They got broken. So this also can be our bullish QM. So price came from these three candles and then shot back up. So that gave us our bullish QM. So our high range is this, our weak low. So we said once we have our trading range here and our bullish QM somewhere down here, we shall be interested in price pulling back to take off and shooting back to the downside. So we expect price to pull back up, taking out all of this. So the swing guys, they have to get taken out. Very simple module. So in this case, where is the internal range liquidity? We can see this three candle formation that was here. It was acting as our internal range liquidity. I spotted it even on the weekly, so I mark it out. And we said we have to get a point of interest that is just above our internal range liquidity, and in this case above the week. So you can mark out this imbalance or you can mark out this candle week. So in this case I marked out the candle week. So I mark it out and I head over to the daily. So price simply rejects from that zone because it has liquidity below it. Number one, very strong point of interest. So this is how I came up with those sales on Euro USD with that very simple approach. So I am risking, let me see, I am risking 26 pips, risking 26 pips, targeting 672 pips. So I'm risking 26 pips target you get, and that is not a poor risk reward at all. So this shall be, it can swing trade over here because you are risking only 26 pips targeting 672 pips, something that other traders can't basically do. So that is how I was able to catch up with that trade. And yeah, I entered it and I shared even the screenshots. So this is the breakdown so that even others can learn from how I was able to do it. And we say these moves are usually shooting down impulsively. They have to hunt for our take profit and hit it. Yeah, so I think this video can be of help to other new traders in these markets, and even the intermediate ones can learn something from it. So this is how I was able to catch up with those sales, and yeah.